Yeah.
So you imagine an open door sort of where you could get Bitcoin in, shares, use your shares if you want liquidity or margin. And then if you want your Bitcoin out, theoretically, you should be able to withdraw the Bitcoin from the exchange.
So how is this not an attack vector that they could rehypothecate between audits and basically do exactly what happened on this last cycle?
Well, I mean, the way you would prevent them from doing that rehypothecation is open transparency about what Bitcoin they hold and when they hold it, and have that number published every day. That's how you do it. If not, your point is a valid one, right? You definitely have windows there where there's less transparency and between audits where you can kind of slip through and not have all the Bitcoin you purport to have. But this should be something like if you are if you recognize that an ETF on balance is a positive thing, even if it's not the preferred way of holding Bitcoin, you should push for transparency and you should say, okay, fine, we want if the ETF is going to come and we can't get around it, have it come, but also have there be very clear accounting and use the latest technology. The whole point of Bitcoin is that you can see in real time who holds what. Identify your addresses, make it clear what you hold.
Hopefully, because there's so many that there are going to be entities that choose to treat it that way.
That's my point. Like when I asked the question about what's the Bitcoiner's ETF, the entity that does that will have me publicly say, don't buy from an ETF, hold Bitcoin natively. But if you're going to buy Bitcoin on an ETF, go with the Franklin Templeton Transparency ETF. That sort of, I don't know. I'm just, go.
No, I think that's a good point because, culturally, a lot of people like to say, oh, Bitcoin maxis, bro, they're boomers, bro. They don't understand, man, whatever. And culturally, Bitcoin maxis do have a lot of power. And if everybody's marching in the same direction and saying like, that's a product, don't use that, it holds some sway, right? So like, I like that as a market force to keep the ETFs a bit honest, or a bit more honest anyway.
And when one of them does it, they're all going to do it, right? If you got one of the ETFs to be transparent about what they're holding, I think it would be it's like fees, right? It's like anything else. Yeah. Once one of them does it, they kind of all have to follow suit to not give a competitive advantage.
I'm just going to cut this clip and send it to Stephen McClurg and just tell him, hey, Joe has some advice for you, Stephen.
Well, you guys, he's going to be upset that you didn't promote the Valkyrie ETF and you went with Fidelity, man.
You're right.
He's not going to come back on the show anymore.
He's going to be very mad at me. You're right. I didn't even think about that. Yes, even though he has like the funniest ticker ever.
Okay, so let me ask the big question. The big question is, all of the ETFs are going to hit in January. That's it. Joe seems pretty confident.
Approved. They might not launch.
He's not just saying January. He's saying the 5th of January.
Or the 8th of January.
And the 8th, that's right.
And there's going to be a lag time. Yeah, there's going to be a lag time before implementation, right? But like, GBTC it will probably be first in line, et cetera. And then all of a sudden, BlackRock has to buy up a bunch of Bitcoin and the price starts to run a bit. And, where do we think we're heading over the next 18 months, 24 months? What does this look like? Let's be honest here. Last cycle was a bit disappointing. You know what I mean? And
I was talking to my uncle, I think it was today. And we were talking about like, okay, so like where are we at in a year, Preston? And like his response back to me, I'm not going to tell you the numbers that I was saying to him. He's like, oh my God, man, you need to put the crack pipe down. So I'm I think the coming 2 years is going to just melt people's brains. And so much of it just has to do with how much compression we've had on this past site. And you can see it, there's a little bit of a meme going around online right now. It's like, oh yeah, it's 70% of the coins haven't moved in a year. But I think that is extremely profound. And I think it's really important. And I think that the speculators that come in at the end that bid the price to the moon in that last like kind of 6-month period, at least historically, it's truly because there's no coins left, right? And the psychopaths that have been stacking it through the 80% drawdowns, their basis is from a cycle or two even before that. And the fact that it would bid to like mid 6 figures or whatever the number is, like still doesn't entice them to sell any meaningful amount of their base position. And like, I think it is just so lost on people, like how important this idea is of like these hodlers of last resort, which is a Trace Mayer term, right? But he's right. And it's vital as to what causes these price pumps, because you're dealing with a fixed supply, terminal supply thing that's like nothing else on this planet.
Joe, what do you think?
I think that the possibility for Bitcoin going exponentially higher this cycle than the prior one is very high. And I'll tell you why. And let's just step into it, just a little bit of a macro conversation here. The Fed has been explicitly targeting a recession. They've almost said that explicitly. When they want the labor market to become more into balance, they want it to rise. Their targets all show unemployment going up. They've talked about specifically how there's going to be softening in the real estate market. And much to their dismay, I think we've not gotten one. And I think that when you have government spending running currently at about 7% of GDP, providing a ton of cash, basically running wartime deficits into the economy right now, and you cannot trigger a recession despite very high rates, you have two potentials that could come from that. Number one, the Fed is forced to just throw up its hands and say, we tried to slow this down. We can't. We don't have the option. We did everything within our power, including QT and fastest rate hiking cycle in 30 years, and we still couldn't slow the darn thing down. But for a variety of reasons, structurally, we can't have the government run these high deficits, so we have to cut in the face of very hot inflation, right? Still far above trend inflation. That is going to be massive for Bitcoin, right? I don't think it was a coincidence that we had this aggressive sell-off when the Fed began its rate hiking campaign really in the early part of 2022, right? That was, and Bitcoin took a hit. I mean, and it affected some of the weaker players in the industry, so that cascaded down. Well, if you have the opposite happening right now, we avoid a recession and we have the Fed is easing proactively because they just throw up their hands and say we can't do it in the government tax burden, it's just too much with these high rates, that's going to be massive. The other possibility, okay, that I think is very bullish is that if you have these structurally higher rates moving forward combined with the government spending, and Lynn Alden talks about this with fiscal dominance, right? That is effectively liquidity built in to push Bitcoin forward, right? You've got a constant flow of cash from the government continuing to borrow more and more money and pumping that through for the entitlement program. So all of those things show you're in a very different environment than I think pre-COVID. And you got a potential new administration coming in. And if you remember, HODL, we talk about this all the time. What did the last administration do? I have these tweets. I think they're funny. Sometimes I go back and review them. And you had the former president, who looks to be the front runner this time, saying we need negative rates. We need rates incredibly low. The Fed should be doing more QE. You've got sort of the political appetite out there to just to the moon, right? Whether that's a good thing, bad thing, depends on where you sit. But to me, like, that's huge. I mean, and you really want to try to time that and like try to figure out who's going to win the White House, like, and decide whether you're going to buy Bitcoin or not. To me, like, I think all roads are going to lead to Bitcoin, like they say, because at the end of the day, okay, we know that debt can only be solved with more debt. That's their only solution to everything. And as the system is constructed now, you can bank on there being more and more debt, which eventually finds its way, that liquidity finds its way into Bitcoin. So yeah, I'm pretty bullish.
You pumping this hopium into your veins there, HODL?
Yeah, I'll give you my perspective is, I track the investor psychology around the Bitcoin markets pretty closely because I'm here all the time, 24/7, 365, and I pay attention to what people say and what the chatter is. And I think there are a lot of people who believe that diminished returns are, the rule of the land. And the one thing I know about being around Bitcoin for 10 years is that whatever everybody believes is absolutely going to happen is categorically not going to happen, right? So like, I think it's likely that we see some sort of a sell-off, right after we break 100K, like around like 120, 130, people start to sell, take profits. People go, God, I'm not sitting through another cycle again. It was terrible. I'm finally going to buy that house, that I wanted, yada, yada, yada. And then the price, it sort of evens out for a bit. Maybe it goes down a little. Then it starts to run again hard, right? I mean, you can definitely see the scenario playing out. And all of those people who sold are suddenly, most of these people will be long-term hodlers who are looking at themselves going, holy, this thing it's happening right now. I'm getting back in. I'm fully invested. Then, the marginal buyer who's bipolar, by the way, goes, wait, these guys are all in. I'm in even more. And then you get the euphoria stage. And like, everybody thinks when they go through the bear market, they go, that you tell yourself a lie in the mirror every morning where you go, I'll never get that greedy again. Nope, not me. No, sir. And then price rises and the greed hits you like a ton of bricks and there's nothing you can do about it. You're strapped into the roller coaster again. So to me, I think we're going to see the diminished return narrative get its legs chopped out from under it. And then we're going to see a real run at Valhalla. We're just going all the way to the moon. That's what I'm predicting.
I think you are all over it. I think you are going to have a lot of people from the 2020 cycle because that cycle was pathetic compared to the 2017 run. I mean, it really was. So you're going to have a bias there with a lot of people that kind of entered that market that I think get shaken out very early on and what they think is a big move. And it's just another little blip on the radar of where this thing's getting ready to go. So I'm with you. I mean, great time to be a Bitcoiner.
It's going to be exciting. It's going to be exciting no matter what happens.
All right. One final thing to talk about. So, let's say that, a lot of people are expecting a recession to kind of really, we're getting these deflationary winds potentially that are brewing. I'm hearing that we're going to have our first cut in the first quarter. Let's say that we do manifest this. And I know, Joe, you just kind of gave all the reasons why you didn't think that was going to happen, but let's just say that it does. And maybe we see a liquidity event similar to like March 2020, where Bitcoin was, I want to say it was up 10, 13,000 and got punished the whole way down to 4,000 in short order because of this impairment and cascading liquidity event that happened through COVID. Who knows whether we could see some type of contagion like that. If that would play out, I'm of the opinion that you would see Bitcoin probably react very similarly to what you saw during that March 2020 event where it sold off really hard, but the bounce was near immediate. I mean, you were within 30 days, you were back up to a price point that you were at. I think the market is primed for a very similar response if we would see some type of contagion in the traditional markets. I'm curious if you guys would agree with that.
Well, I'll just say that it depends on what the contagion is, right? I mean, in the COVID circumstance, which I think is a unique set of factors where you had a very uncertain situation where there was a mad dash to get cash and you had disorder in the treasury market, which primarily cascaded through every other asset class. Yes, I would agree.